Hey everyone, welcome back to Brazil Crypto Report, a podcast produced by Activo Media and Advisory. I'm your host, Aaron Stanley, and today we're going to be exploring BRL1, which is a Brazilian real pegged stablecoin that's run by a consortium consisting of Mercado Bitcoin, Bitso, and Foxbit. I'm joined today by Thomaz Teixeira, who's the CEO of BRL1, and also Ben Reid, who's the head of stablecoins at Bitso. Before we dive in, I wanted to give a quick shout out to our show sponsors. We have Avenia, which is building seamless infrastructure for cross-border payments in the Americas. And we have Figment, which provides staking services to more than 1,000 financial institutions globally. We'll be hearing more about them a bit later in the show. With that, I would like to welcome Thomaz and Ben to the show.
Thanks, Aaron. Great to be here.
Thank you. Amazing. Yeah, it's great to have you guys both here. And to start off, maybe Thomaz, I would love to maybe have you give us the quick elevator pitch for what is BRL1, and then tell us a bit about your background, how you became involved in the project.
Well, BRL1 is institutional grade stablecoin, 1 to real, meaning one BRL1 follows one real. Okay, this is developed by a consortium of major crypto exchanges and players in Brazil: Bitso, Mercado Bitcoin, Cainvest, and Foxbit. Okay, the idea is to make it an infrastructure solution, a network that serves the market in removing friction, especially between moving reais and value between a market and among exchanges globally. So this is something that is happening very happy to say. The response from the market is great. People are using that a lot, specifically very intense use for market makers and liquidity providers. Okay, and for that we count on not only the consortium members that are very important players, but also on an expanding network of players that are using and being able to distribute BRL1.
Awesome. And then maybe give us a quick just background on yourself. How did you get involved in this world of tokenization and stablecoins?
Sure. For me, it's very much a continuation. I've worked 20 years in financial markets, always involved in innovation and technology. And that was basically, high-frequency trading, algo trading, statistical arbitrage. And that was always in terms of, okay, what's next in terms of technology? What's next in terms of communication? How can you exchange more information faster and more secure? And by 2017-ish, something like that, Bitcoin was okay. I did not get a full first wave of Bitcoin, but had some friends in the market. Then Ethereum said, okay, that's it. Then I moved instantly to say, okay, that's exactly what I do, because it's just bringing more markets, and not only capital markets, financial markets, but also information globally. And first, then we say, let's tokenize this. Then right after, I say, okay, look, if you're doing tokenization of assets, stuff anyway, you need to tokenize money, because when you're talking about economy value, you need money to run this up. So by 2019, I approached a central bank in Brazil by Lift initiative with Thomaz back, which Aaron knows very well. Public probably is very familiar with a central bank in Brazil on Lift. And we started discussing then, which was a real-backed digital currency. So, of course, this is what you know today as a stablecoin. And since then, I was involved with Drex. I was also part of the CVM sandbox in Brazil, which is the Securities Commission sandbox, with tokenization of securities. So that was very much since the beginning of this institutional effort in Brazil. And then I was following and admiring, was a bit of, okay, I should be there when the consortium started the process that became BRL1. And luckily for me, we got, very good vibe, and we worked together. And Ben was a key part of that since the beginning. He'll probably tell more, but I'm very enthusiastic of Ben's participation here, and he's ushered me into the BRL1 ethos and the consortium and the whole opportunity we're having. And we started a few months ago. We're already the 6 more traded asset in crypto asset in Brazil. So it's going great. But for me, it's just a continuation. It's just like, we're talking markets, we're talking connectivity, we're talking innovation. That's the way it goes.
And then, Ben, would love to learn a bit more about you and what you're working on at Bitso. And how did you get involved in this project as well?
Sure thing. My role, as you mentioned, is head of stablecoins at Bitso, and also the head of our issuer arm, which we call Juno. Bitso kind of has the exchange business, which a lot of people know, been around for a long time, operates in 4 countries in LATAM. It has Bitso business, which is a cross-border payments arm involving stablecoins. And then from that perch, Bitso kind of had a front row seat to the role that stablecoins are starting to play in LATAM, I think earlier than most, and decided to make a bet, and it's an ongoing bet, that non-dollar stablecoins, local stablecoins in LATAM currencies, there's a need for them, there's a place for them, they have legs, and actually in Mexico in particular, if anyone is going to have the ingredients to give it good success, it's Bitso. And so we have another stablecoin called MXNB, a Mexican peso stablecoin. And so you can think of me as the GM of our issuance business. But Bitso then opportunistically was brought in to the BRL1 consortium, which was approached by others. And it's sort of a unique beast. It's a little different than a typical stablecoin issuance. The way the consortium came together, the rationale for it, and kind of where we are today. But you can think of me as kind of the business head of our stablecoin issuance initiatives across MXNB and BRL1.
Yeah, I'd like to double click on kind of the origin story of BRL1, because the consortium piece is something that's quite unique. And frankly, I haven't seen another stablecoin sort of issuance model like this. Maybe there's one that exists somewhere else in the world, but I haven't really seen anything comparable, where it seems like the zeitgeist now is all these entities are trying to issue their own stable coins, but you guys have said like, hey, let's team up and let's work together. And you guys are all ostensibly competitors, right? But in this case, like, hey, let's team up and let's do this thing together. Maybe talk a bit about like why and how did this consortium concept come into play, and like why did you guys ultimately decide that, hey, it's we're all competitors, but like let's team up on this one thing because we're all going to come out ahead. Maybe Ben, if you want to take that first, then Thomaz, would love your thoughts.
Yeah, when I heard the rationale, it kind of blew my mind a little bit. I got very excited when I understood it better, and I won't claim that I understood it right away when I first came into the role. Brazil has, in my view, a unique set of circumstances if you look at it compared to most other countries, certainly in LATAM. Compared to Mexico, Mexico has a relatively few number of exchanges. Bitso is by far the biggest exchange operating in Mexico. And so there's a relatively few number of exchanges compared to the size of the country. Even if you go to the US, I would argue there's relatively few compared to the size of the country. Brazil has and in particular, what I mean is with books denominated in the local currency. That's in particular what I mean, not just like you can access the website in the country. Brazil is unique. There's like 20 exchanges that have BRL denominated books, and which is relatively high. And then there's relatively few number of market makers that specialize in making BRL denominated books. That is a unique skill set, not just a market maker from across the world that doesn't have access to Brazilian banks, doesn't handle BRL, can't just like slot themselves in and start making markets in BRL books. So it is a unique skill set. I would say there's relatively few of them compared to the number of exchanges. That means they're being asked to be very efficient. And then add on to that it's a high cost of capital country with the Selic rate at 15%. And you combine all that together, and the market makers need to be extremely efficient with their funds and be very nimble in order to properly serve all these exchanges. And so the original genesis of it, and why you see it coming together as a consortium of, you mentioned 3 exchanges, Bitso, Mercado Bitcoin, Foxbit, but the 4th partner is Cainvest, which is a market maker. And that's the reason it came together, is there's an identification that it's difficult to properly serve all these exchanges. If there was a inter-exchange value mechanism, an easy way to move a BRL value between exchanges, it would make life a lot better. It's not to say this is the only function of BRL, but I do think it's a great initial kind of genesis story. And so that, because if a market maker needs to move funds between exchanges, it's not like this is their only option. They can use a dollar stablecoin or other crypto asset, but then if their home base is always BRL, they're always going into another asset, moving it, and then going back to BRL, and they're paying each time they do. They could use PIX. They could just move BRL, but you can't PIX directly between exchange accounts. So you have to off ramp, and then on-ramp to another exchange and off-ramp and on-ramp to another exchange. And that can be inefficient. And I believe in some cases there could be tax implications. And so by having a Brazilian real stablecoin that is not only listed on those exchanges, but the future vision is, and I think this is going to be a trend you're going to see with stablecoins on exchanges, is enabled in a one-to-one manner at some point between BRL and BRL1, so without a spread, which is not the way that it is today, but that's how, just a today thing, that would make these market makers the most efficient. And that's why we've it started life as a consortium, but I think that maybe is the wrong way for us to talk about it moving forward. We talked a little bit about this, and we're ready to start talking about it a bit more, that we certainly want to introduce and talk about BRL1 as a network among all the operators in the Brazilian ecosystem for whom this makes sense. So Thomaz mentioned other local exchanges and global exchanges, anyone operating in the Brazilian ecosystem with BRL denominated books where we're sharing the same market makers. We have the same liquidity providers and market makers that need to do their job in order to make all of our exchanges, all of our outlets function better and serve all of our collective customers better. The invitation is now open to them to join the network, to join us. And there's benefits and upside if they do. And so we're in the process of actively talking to some. We'll welcome our first additional members to the network soon. You'll see some public announcements on that shortly. And so we're sort of evolving the way we talk about it and the way we position it, because it's not just a closed consortium of 4 members. We want to think of it and try to open it as a network.
Yeah, and Thomaz, would love your reaction to that. And what was your kind of vantage point on the origin story of this consortium and soon to become network?
Well, as Ben said, it's very important that the expanding part. Let's say the consortium is, from the start, is the idea of let's make a market project. It's not like, as you mentioned, everybody's going to be doing their own stablecoin. Of course, if you get some merchants doing their stablecoin, they're going to optimize for this vertical, but that's not going to serve the market properly. So, and also it's not completely unprecedented if, in a way, if you see even Tether with Bitfinex and definitely Circle with Coinbase, you see a movement. Okay, let's not make it a single issuer denominated special exchange stablecoin. So this is something that the consortium members were keen to look ahead a bit. But also, if you start with 100 members, then it's very confusing to get something alignment. So I think this is an optimum, a good midway between, okay, let's do the whole market together, but also let's not do one. And importantly, mentioned by Ben that yes, liquidity providing is a key factor to it. But also one thing that we got is that when you get 2 competitors working together, you learn how to share governance. You learn how to share revenue. You learn how to hear each other and say, okay, let's not just design this for the best solution I have in or just my customers have. And so this is something sort of a side effect. Okay? And also we have to learn immediately that, yes, there are some product lines and some partnerships and design that is work specifically to work very well with AmexMB and Juno and Ben initiative, for instance. But also we have other initiatives within Bitso Business that has to be taken care of. And when we learn how to do that, and we had to do that from start, it's very good when you get new people, new companies and new business coming in and say, we have experience in churning and taking products that are not exactly fit, and we'll make sure that BRL1 can do that. So in this sense, for me, it's amazing that it started as a consortium. Of course, as it gets broader in the network, there will be more inputs and more governance upgrades and a bit more sense of, okay, this is very nice the way it is. Why are not doing more, I don't know, DeFi? We're not doing more, connectivity to this and these solutions. So this is something that starting as competitors and partners working together, this is something that is very, very much unique and it's something that I don't think is very easy for when you say, okay, lots of people come with stablecoins, for a single user to or issuer to, I don't know, implement that or compete with that.
You actually front ran one of my questions, which was going to be about some of this, the governance component of this. So thank you for that. I did want to follow up on what Ben had mentioned before about how Brazil kind of has this unique set of circumstances that make a project like this quite compelling and viable, perhaps more so than other markets. I mean, Thomas, do you ultimately see this as like, is this an exportable model like what you guys have built here? Or is this more of like, I guess you could say like, a jabuticaba, right? Where it's like like it only exists in Brazil, right? It's like this weird fruit that only exists in Brazil. So you call it like a jabuticaba, right? But is this something that you could export to a different market basically? Or is this something that like works just because you have this unique set of circumstances that Ben outlined earlier specific to the Brazil market? Figment is the leading independent provider of institutional staking infrastructure with over $18 billion in assets under stake and more than 1,000 clients across Latin America and globally. Banks, exchanges, fintechs, and asset managers can earn secure and compliant rewards on proof-of-stake networks using Figment's non-custodial infrastructure. They offer everything institutions need to stake with confidence: point-and-click staking, real-time portfolio tracking, powerful APIs, audited infrastructure, and industry-leading slashing protection. Head over to figment.io to learn more. I'd like to take a moment to tell you about our show sponsor, Avenia. If you're building a wallet, a crypto consumer app, or a global payment platform, Avenia is your bridge to Latin America. You can instantly connect to PIX, SPAY, and CBU using stablecoins with a single API. No banks, no FX desks, no SWIFT. Head over to avenia.io to learn about how you can move money globally with full compliance and real-time settlement. Now back to the show. But is this something that you could export to a different market, basically, or is this something that like works just because you have this unique set of circumstances that Ben outlined earlier, specific to the Brazil market?
I think the speed of adoption can be unique to Brazil because, as Ben very correctly pointed out, Brazil has a market, a crypto market especially, that has many relevant exchanges, many relevant markets. Okay. This is not exactly the same for many countries, especially, let's say, in Latin America, where sometimes the crypto market's dominated or relatively dominated by a few exchanges. In this sense, when you have a product that's very good for moving value in real denomination among exchanges, oh, great. So, of course, it's particularly useful for Brazil in this sense. But this is specifically about centralized crypto exchanges. Now, when you talk about the market for real on-chain value is much broader than that. Okay, we're talking about effects, we're talking about payments, we're talking about cross-border investments, capital markets, and this is something that is present in many other markets. And in many of those players, we have a similar case to that of crypto exchanges in Brazil. Let's say when we're talking about capital markets and securities distribution, we're talking about asset managers. We have a flourishing market and competing market in many other countries that could, in a soon-to-be future where securities are tokenized, be using stablecoins to clear, settle, move value among those players. So even though for the immediate case it was more readily accepted and let's say used in Brazil, I think that absolutely the network let's build together model of stablecoin makes complete sense for a general use.
Well, it's very aligned with the Web3 ethos, right? And I think it's a model that's maybe it's kind of refreshing to see this vis-a-vis. I think the trend now is like all these these kind of corporate chains and corporate stable coins and whatnot that are popping up that are basically just walled gardens that are maybe this is sort of inevitable to some degree, but I think it's a lot of people see this stuff and they're like, this isn't why I got into crypto. This isn't why I got into Web3. It's just sort of recreating existing business models, just using this new technology. So I like this idea of kind of opening this up and creating more of a network, kind of a rising tide lifts all boats sort of mindset, so to speak. Ben, turning back to you here, I'd be interested in just getting some more color from the Bitso side on kind of how this fits into your broader like LATAM stablecoin strategy. Because I know you guys have just done sort of a recent rebranding as well, and just be curious as to like how does this kind of serve as a lever for kind of broadening your this kind of local stablecoin push that you guys are doing around the region.
Let me comment real quick on just the last thing, and then I'll comment on that if you don't mind. Which is just to say that I agree broadly that you can make a network around a stablecoin, and that can be exported to other countries or other regions. And in fact, I would say we took some inspiration from Paxos, which has their global dollar network. US and USDG is the token, and they've sort of built a network around that. I think Brazil still has an extremely unique set of circumstances where the focus and then the focal point of the network is extremely tight and easy to understand. Like, this is the reason for this to exist right now. As Thomaz is saying, and I don't want to say this is the only reason for this. Of course, we would love. We've got a lot of things in the works within DeFi and pools and stuff like that. That's not limited to the BRL1 use case, but the initial network use case, I do think is maybe the tightest one that I've seen. Meaning the one that, like, to me is like the clearest. Like, oh, that's a reason for a network to exist. Whereas like you can just create a network and be like, we're giving everybody yield share, and they're all in the network now, and that's great. But to have a real utility to it, there are other reasons for. That one might create a network around a stablecoin, but it's one thing to have kind of a broad, like, it's a network and everybody in the network gets yield share, but there's a sort of a who's who of sort of company types that are joining the network. Like, that's great, and that's certainly a great model. What I loved about BRL1 is this is about, initially at least, getting anybody who has BRL denominated books in the network. It's a very tight and focused use case that to me is extremely easy to understand and digest and just makes a lot of sense. So that's kind of, that to me is, I'm not aware of any other country where that exists. I'm sure maybe, I don't know, Australia could do it, or there's probably a few countries where I have a similar set of ingredients, high number of exchanges, relatively low market makers, high cost of capital. I don't know if that's really fully there in Australia. I think Brazil is the best place for something like this to be tried.
And then Ben, so talk a bit more about how this fits into Bitso's broader kind of stablecoin strategy around the region that you had mentioned earlier, with this focus on local stablecoins. How does this sort of serve as the groundwork for building that out?
At a high level, our stablecoin issuance initiatives with BRL1 and MXNB are deeply strategic. Bitso operates in 4 LATAM countries. We view ourselves as a leader in LATAM, and so being involved in stablecoin projects in those markets, and potentially more that we operate in, is deeply important for Bitso as a whole, for our strategic positioning in those markets. That's at a high level. But the other thing that we're taking advantage of here, and what's, I think, unique about Bitso's involvement here, Bitso Business was built on the back of both Bitso's liquidity, but also Bitso's ramps. And this is a little bit of a superpower that Bitso has, is that our fiat ramps, Bitso in Mexico is one of 8 directly integrated companies directly integrated to SPAY. We're licensed IFPay. In Brazil, we have Pix ramps. And so our ramps are high quality, and again, Bitso Business is built on that. And so with these stable coins, what we've done is uniquely been able to connect the fiat ramp to the stablecoin. So through the Juno platform. So when we say Juno, this is not just a marketing brand under Bitso. It's a company, but it's also a platform. We call it the Juno Mint platform. On Build a Juno is where it's accessed. And this is the mint and burn, the automated mint and burn platform for the stablecoins that we issue. MXNB is there today. BRL1 will be there soon. But crucially, what it does is it connects Bitso's fiat ramps with the mint and burn of the stablecoin. So in Mexico, we can have pesos in a bank account turn into pesos on chain in a matter of seconds, because the SPAY transfer is instant, the minting is instant, and then you can make an on-chain transfer, and vice versa as well. And that is pretty powerful. When you look at some of the other stablecoins that that exist. Like it's hard to directly connect them to ramps, especially owned ramps of the issuer. And so we're doing the same thing with BRL1. And so that's another angle to Bitso's strategic involvement, is this is a way for us to connect strong assets within the Bitso ecosystem, in particular our ramps. And that's core to like Bitso Business's growth, as well as the growth of those ramps. And we've also, by the way, been able to integrate Bitso's FX, which is another area of strength, meaning the liquidity for swapping tokens and swapping assets. So like in the Juno Mint platform today, partners that mint MXNB, they can actually access Bitso liquidity to swap MXNB for USDC or USDT, because obviously moving back and forth between dollar stablecoins is the most interesting swap right now. BRL1 will be on Juno soon, and the same thing will exist. Not only will our partners be able to mint and burn directly via PIX, they'll also be able to mint and burn, by the way, directly via BRL balances in the Bitso account. So for parties that don't have access to PIX or don't have Brazilian bank accounts, they can also be mint and burn partners through the Bitso platform, but they can also then access Bitso's FX to convert BRL1 to USDC or USDT. So that's very strategic for Bitso as well. That's furthering Bitso's ramps as well as FX business through these stablecoins, and that's deeply strategic for us as well.
And Thomaz, I guess I'd be curious as to your view on Ben's thesis there on the emerging market stablecoins or local currency stablecoins, and then I'd also like for you to touch on, what are some other the use cases that we see coming down the pipe for something like BRL1. I mean, you guys have been talking about kind of on-chain FX and things like arbitrage and as these, what types of institutional use cases are we going to see becoming kind of popularized as these currencies gain more traction and more liquidity, et cetera?
I'm biased because I had privilege of talking constantly with Ben and discussing this. So his thesis, I share a lot of that. Okay, but so it's biased because I'm hearing him a lot. But I do believe that it has a different trend, and yes, part of that is also because, in a way, the part of the success of Tether, USDT, and USDC was specifically in the global south, was something that for non-US specifically, but non-Europeans and US markets, having access to dollar was something that was particularly hard, expensive, troublesome, took time, very inefficient. So that's a gap that was very fastly closed by access to stablecoins in terms of USD denominated stablecoins. Whereas now you have lots of, we mentioned here, some merchants are doing some garden stablecoins, closed product. That's because it's efficient. Okay. Now this efficiency is coming to the local markets, coming to retail. And now what you have is that you have lots of access to USD stablecoins, but those are not always reaching the retail and the real world market breeder economy, and that's a road that local stablecoins will probably fill. And in this sense, I share the view of Ben completely, because maybe he didn't say this word, so we changed a bit, but yes, you get a more institutional, market-wise liquidity for stablecoin, because stablecoins, when we're connecting, as Ben said, all real-denominated market should be using BRL1 because it's just more business, and their customers is using that because it's a better way to trade, it's a better way to move and make arbitrage. And if you're trading to make a profit, let's say, if not, it's fine. But if you're trading to make a profit, you should definitely be using BR1. And that's why I think that every single market that has any BR1 denominated asset should and probably will be accessing and leveraging or connecting BR1 in some way. When you see it, the vice versa was been said is that when you have liquidity in centralized markets in BR1 against other assets, then this will be a channel for USD denominated stablecoins to connect to a stablecoin denominated in real, which by its turn would be easy to connect to PIX and the Brazil economy.
Ben, you want to jump in there?
Yeah, so it's probably worth adding a little more nuance to my comment about like retail versus institutional. I get the question a lot as an issuer of two non-USD stablecoins, like how are they used? What do you see? And oftentimes there's a USD lens applied to that question. Like people understandably take what they know about how stablecoins, which for most people means USD stablecoins, and their uses today, and they sort of come at the question of other stablecoins through that lens. So are people going to use MXNB for in Argentina for for wealth preservation or as a tool against inflation? No, dollar stablecoins do that better. Are people going to, is Binance going to start using it in place of USDT? No. So there's a lot of things where applying the USD lens, in particular to retail, doesn't hold up. And so that's kind of where I say, yeah, those initial retail use cases are not what we see. But it's not to say there's not a retail angle, because we're talking, let's keep in mind, BRL1 is a consortium among centralized exchanges that serve retail. The expectation is that it's not just a behind the scenes token. Yes, we talked about the market maker efficiency, but that doesn't mean that it never sees the light of day to the retail user. So what's another initial use case that we're seeing that I think is, as we talk about the adoption curve and this wave that I expect to see over the coming years of adoption of non-dollar stablecoins, it's going to start with, or what we're seeing it start with, is those who are already very comfortable with their stablecoin strategy, the sort of the early adopters, and that is exchanges themselves and crypto companies themselves. And what I mean is, one of the key things we're seeing for both MXNB and BRL1 is localized onboarding to the exchanges. What I mean is we're seeing demand, and you're going to see this live in the near future. A lot of exchanges have started to realize, hey, when I'm a global exchange, when I enter market X, when I enter Mexico, when I enter Brazil, the way that a lot of exchanges started, the worst way, but an acceptable way, is pure reverse solicitation. The website is available. I don't block people's IP, and they can create an account, but there's no local ramps whatsoever. So if you want to move value onto the exchange and start trading, you can buy USDT somewhere else and transfer it on. It's evolved to where a lot of exchanges now have found local ramps so that somebody can process a local payment, so SPAY in Mexico or PIX in Brazil. But then what are they on ramp to? The exchange still does not have the proper licenses usually to be able to custody fiat on behalf of the user. That's an entirely different ballgame than having somebody just process the payment. So they end up ramping them right into a dollar stablecoin is what happens. And so the first action that you're forcing a user to do out of the gate, sure, it's great. You can take Real or you can take pesos, but you're forcing them to pay FX right away, and you're forcing them to think in dollars, when the reality is, even though LATAM tends to get painted with a broad brush, that everybody just sort of wants dollar stablecoins, the reality is much more nuanced, and local people live their life, Brazilians live their life in real and Mexicans live their life in pesos. And so forcing them to constantly think and do mental math of dollars, I don't think is the best user experience. And so we've seen exchanges come to the realization that, what the best experience is those local ramps into a local dollar stablecoin one-to-one. Somebody on-ramps 1,000 MXN, they're holding 1,000 MXNB. Somebody on-ramps 1,000 BRL, they're holding 1,000 BRL1 on the exchange. From there, they can go and trade it. If they want to go to a dollar stablecoin, they can. If they change their mind and they want to take their money back off, they can take it back off. They'll get 1,000 BRL back, or they'll get 1,000 MXNB back. Whereas if they were going into a dollar stablecoin and then back out again, they wouldn't. They'd get paid. They'd pay FX. They'd be charging a toll both ways. So this is an initial use case that, again, there's more nuance to this. Would you call that a retail use case? Well, it's an exchange doing it, but it's on behalf of, you're going to see it kind of come up in a retail experience. And so, I don't know, this is just a little bit of a preview into the kind of use cases we're seeing. But in my mind, it makes perfect sense to see that is the beginning of the wave. And then you start to see sort of the companies that are a little bit behind the centralized exchanges in terms of their comfort level come on board. But by that point, hopefully these stablecoins, it sort of has helped to justify their use case. When you see them starting to be used on centralized exchanges in this manner, it becomes a lot easier for the next company to say, okay, exchange X and exchange Y are using it widely. This large liquidity providers are providing liquidity. I feel a little bit de-risked than the current status quo, which is where, oh, these stablecoins are all really small. I'm not sure if I'm comfortable using them quite yet. We're going to wait and see how this develops.
Yeah, that makes a lot of sense, right? Especially as we're seeing, just greater competition. We're kind of seeing greater consolidation in the exchange space, but we're also seeing greater competition, and like really, these fees are going to get competed down to basically, as probably as low as possible, right? And this is one way that an exchange can lower the fees that it's charging to its users, where it's if you have to pay an extra toll every time you on ramp in and on ramp out, just because of this, you have this FX rate converting from real into dollar, peso into dollar, and vice versa. That's if you can eliminate that fee, then you can pass that savings to your customers immediately, right?
100%. And we're seeing a lot of recognition that it's also simply the superior user experience. Like, again, first action that I do, I just joined this exchange. I'm going to give it a shot. I'm going to load 1,000 pesos to just on-ramp them into a digital peso or a digital real is the best user experience. We're starting to see a number of exchanges come to this conclusion at the same time, which is very positive, I think, for the non-dollar stablecoin world.
And Thomaz, I want to shift gears slightly here. And you mentioned that you had been kind of part of the Drex project in the early days, or kind of involved in like ideating some of that. And as we know, the Brazilian central bank kind of pivoted the Drex project a couple of months ago, and they're focusing on some different things. And in effect, it seems like they've kind of punted this project to like the private sector, kind of passed the baton to the private sector, essentially, kind of if we want to use like relay race visuals here. But how do you think that something like BRL1 can potentially maybe accomplish what the central banks was envisioning with its digital real Drex project, or what are maybe some of the overlaps that you guys can fill that project is not filling now?
No, absolutely. I think that we hope to fill a lot of it. I was part of the Drex initiative in 2 projects, so I was very involved from the beginning. I'm a big fan of it. I'm a big fan of the central bank team who was involved. Okay, I was still involved in different forms. But first, because especially now with the Genius Act, okay, we need some form of, if not response, an alternative for people who in Brazil are using USDC or USDT or USD or PAX and so on. Because let's say if you're an exporter in Brazil, okay, and you are using stablecoins because it's efficient, because you don't have to wait for 8 days for your payment to be seen by the Chinese freight, so on. And okay, good. Very smart. You're doing more business. You're with a much better experience, as Ben was saying. But you don't have an alternative to be in a real denominated stablecoin. So what happens that you're stuck with a 6-to-1 rate from let's say end of 2024 or early 2024 to 530. So okay, you got the benefit of incentive of efficiency. But on the other hand, you're locked into being in USDC, in dollar, okay? Which, in this case, we're not discussing why is the dollar up, dollar down, real up, real down, but it moves. And if you're an exporter, sometimes you want to hedge out in reals. Okay, so, okay, great, you made it, but you have to have real to keep continuing your business. So in this sense, we are an opportunity for all the people who are dealing with stablecoin to be able to be in real, parked in real. And that's not, as Ben said, Brazilians, they do think in real. It's great to have the alternative to go to USD, but so in this sense, yes, absolutely. This was one goal of Drex, which is, okay, let's make sure Brazilians have the alternative to do that. Other goals that we see is that let's make sure markets are not siloed. And well, Aaron has a long experience in Brazil. He's the maybe the most Brazilian gringo we see around. But
that's how I put,
as you know, like.
Yeah, that's the best compliment I've received all year. Thank you.
Well, so you know that cars, retail, renting, housing, all this has very different, very bureaucratic ways to, financing, credit cards. It's all very siloed in Brazil. And one push of a central bank towards more democratic as more open markets and more competitive markets is to kind of interoperate those silos. And this is another thing that I think BRL1 can help. Because when you're talking about, okay, let's make sure we can have tokenized assets settled in BRL1. And those are connecting to payment gateways and payment mechanisms and wallets. And let's make sure eventually that securities investments can also be settled and cleared against crypto assets. And how to do that? You have to have real denominated. Okay, and so that's another sense we hope we can take the honor or filling the gap here. And importantly, one thing that we're trying to do is that when you have the Genius Act and you have this drive towards USD denominated stablecoins pushing demand for US treasuries, okay, real denominated stablecoins would be kind of okay. If you want to be in a sort of a Web3 circling Brazil and within Brazil reach in terms of doing business in Brazil, but in Web3, then if you have real and the regulation still out, so let's see, but if you have, as we do, okay, responsible real issuers that pretty much tie that to Brazilian treasury, which is the safest, most secure liquid way to hold your reserves, then actually you're driving part of the demand that is now on Tether in USDC just because they don't have alternative towards financing Brazilian economy and having that a stronger financial sector in Brazil. So this is something that I wouldn't go as far as saying that, okay, straight out synthetic CBDC, but yes, in many ways, we want to live on the Drex dream, let's say.
Oh, amazing. Yeah, that was kind of the first thing that came to mind when I was researching this project. It was like, wow, this feels like it's kind of filling in some of the gaps of what the Drex project was, or there's some shared objectives basically with what the Drex project was trying to do, which was really sort of break down some of these silos, increase just liquidity throughout the economy, et cetera. Maybe final question here before I let you guys go. But I think generally in the crypto community, when we talk about local stable coins or emerging market stable coins, whatever we want to call them, there's kind of this like reflexive response where like it's like, okay, yeah, these are interesting ideas, but there's no liquidity for these things and there's no demand for these things, and therefore we're just not that interested in these things, right? And obviously I think people are a bit more involved in the game sort of know that that's perhaps not entirely true, but I think there are some like liquidity issues with some of these assets where particularly on maybe there for some of these assets there's a lot more sellers than there are buyers, right? So how do you, I feel like you kind of had this sort of chicken and egg problem with some of these types of assets where, what's the, like, how do you kind of get to the point where there's enough liquidity in these things for like people to continue wanting to use them and participating in them, et cetera. And maybe I guess I'd appreciate both your opinions on both of these, on these topics here, just because this is kind of a common response I get from people whenever I talk about emerging market stablecoins with folks who are just more in like the USD stablecoin game a bit more generally. But maybe Ben, I'll start with you, and then maybe Thomaz, if you want to take that as well afterward.
Yeah, I think the question is, how do you bootstrap liquidity? How do we expect it to happen in this world? Obviously, having for BRL1 the immediate listing on the 3 exchanges in the consortium creates at least some level of liquidity. And actually, if you look at the charts of centralized exchange token volumes, BRL1 is either 6th or 7th on any given day in Brazil. Like it's ahead of tokens that much higher. It's usually ahead of Doge. It's sometimes ahead of Solana. Like the actual exchange trading volumes, if you look on, I think it's on Livecoins, like it's actually pretty high. But I don't know that fully, if somebody comes in and says, what about the liquidity? We're seeing that. So then the second piece is we're seeing, in addition to like then also welcoming more exchanges in, as we've talked about previously, in addition to that, we're seeing a lot of institutional market makers, as I mentioned, start to position themselves for where they think the puck is going. And they're saying, we want to onboard this token and that token. We're going in each of the G20 markets. We're trying to find the most either liquid or trusted or who we know best, and we're going to onboard the stablecoins and begin making markets. And some of them have demand. Some of them are like, we work with corporates who do cross-border, big institutional finance flows between markets for large, shipments of goods and services. Some of them are just in the financial services world, and they're just like, we want to make markets for whoever wants to trade them. But there is a little chicken and egg, and you just kind of have to grow it brick by brick. So I'm expecting that piece as well is not something that will be solved overnight. It will be solved over the course of this wave that's happening. But we are seeing the ingredients come together. I do feel like we're seeing a lot of movement. It's not like we're sitting here and we're the only ones doing this and quietly just hoping that people come around. My days are filled with conversations of people getting ready to onboard. They have plans for what they're doing. Exchanges starting to plan to use these local tokens in the way that I mentioned as localized on-ramp currencies. This is all happening under the hood. It's just if you're not watching closely or you're not in it, you don't see it. So it's where I get for a good deal of confidence that this is kind of a wave, and I think the liquidity piece will follow that wave as well.
I totally agree. And as Ben said, because you have to look closer, because sometimes we usually talk about aggregates, right? We're talking about the whole market liquidity. We're talking about mini markets, so on. But often enough, we're talking about markets, but there are really individual players and really individual strategies and so on. So, for instance, as Ben mentioned, like on Litecoins, last 24 hours, BRL1 had 50%, about half what the volume of USDC in Brazil, on centralized exchanges, and which is very, very nice by itself. But if you think that it's only been live for a few months, and also every single user of BRL1 at this point already knew or had capability or had strategies designed to be using USDC, USDT, or maybe XRP, Solana, but especially those tokens that are to move between markets. We're talking about only stablecoins for comparison. So in that sense, you say, so those guys, they're already trading and using USD stablecoins for years sometimes, and they're using it a lot. So something is for real. It's really users doing that. It's not something that we're moving it. So then this is kind of the aggregate. You say, so there's something really going on. There's some real demand, and then you start noticing, because we actively try to connect with end users and say, even though we are more institutional and look at markets, we connect exchanges, and as every single pool and liquidity and book that has BRL denominated, we try to connect and understand what's the value. In many cases, who's using that? And we go and talk to the people. And sometimes we say, this is good. We tried that. This is nice. We try to make a bit more of our flow there. And then because of that, you see the other guy that says, I was planning to, trade Bitcoin, trade some other token on that exchange, but I couldn't because it was so fast. Now I can, because I see that I can do more volume using BRL1. And the other guy say, I see that now they're doing that. Actually, there is some interesting market to arbitrage. So this is actually driving more liquidity towards those markets. So in this sense, we see that use fuel and stimulates more use, because not only we're connecting, but also because they're connected, you can see simply more liquidity. The economic, let's say, the economic sign and information, and in this case, information is money, really flows much faster. And this is good. The more efficient, the more trade you have, the more efficient economy, and the more activity we have. So for everyone.
Well, Ben and Thomaz, I appreciate both of your time this morning. Turn it back to both of you for some final thoughts. How can folks find you if they want to get in touch or learn more? Maybe Ben, we'll start with you.
You go to buildwithjuno.com, you'll find the Juno platform, which is the platform that both MXNB is issued through, and BRL1 will soon be issued through, and obviously Bitso.com as well. You can find me on LinkedIn. I'm not too big on crypto Twitter these days, but I try to do my best Aaron Stanley impersonation and provide good content when I can on LinkedIn.
Amazing. Thomaz?
IO, you find information there. You can look into a bit more details. LinkedIn, of course, I'm happy to connect and share thoughts. And also, I know that a big part of Brazilian, and not only those looking at the Brazil community, watch this podcast. So, and we are in many WhatsApp groups, chat groups, events. Reach out. We know that people who have access and control or unorganized real-denominated books watch our podcast and say hi. Let's make sure you're on board.
Well, guys, thanks so much for your time this morning. I really enjoyed learning about this project. It's really cool what you guys have accomplished and what you guys are building and the vision for kind of expanding the network, et cetera. So it's very, very like exciting use case you guys have stumbled upon here, and wishing you guys continued success. So appreciate your time, and thanks everyone for watching.
Thank you. Thanks, Ben. Aaron.
Thank you, guys. We'll see you next time on Brazil Crypto Report.